Yes, I've sold my Palantir shares. This is not just a typical YouTube video, it's a full lesson on fundamental analysis. In this video I will walk you through all the calculations and I'll explain you exactly why I made this decision.
This is the occasion to show you exactly, as you can see from the Excel file, the calculation that are behind the forecaster. Because as you know, if you follow my webinar since a while, the goal of the forecaster is not to be a black box, is just to share with you data that you can trust, okay? So I said, wow, I made an important move. I just sold Palantir. This is the occasion to share exactly the math behind this move. Okay, so this is my portfolio. It's called app because this is a portfolio I created thanks to the money I gained with the selling of an apartment here in Switzerland. Okay, I had an apartment. I saw huge opportunities on the stock market thanks to the forecaster. So I said, I sell the apartment and I put everything in in stocks. Okay, and as you can see directly from this real account, it's paying because look, since 1 month and a half, something like that, we were at the very bottom of the market. I bought all these companies and also Bitcoin and Nvidia, okay? And this is the results at the moment, okay? So why I decided to sell Palantir? Palantir is a great company, but look, if we go here, at the moment, if we sort all the components of the portfolio for the based on fair value over valuation, we see a very high overvaluation. Okay, let's deep dive this number because it's very interesting, guys. Here we have a company which is growing fast, both on sales and net income, but at the moment, thanks to the Peter Lynch fair value calculation method, we can definitely say we are in front of a company which is overvalued. Okay, if we just take a calculator and we divide the actual price, which is $132, per the fair value, which is 22, we have a company which is 6 times more priced than the fair value. Let's go to this paper where you can now understand what's behind this number exactly, okay? Because the Peter Lynch formula for the fair value is very easy. As you can see, Peter Lynch fair value calculation assumes that when a stock is fairly valued, its trailing PE ratio, okay, is equal to its long-term earning per share growth rate. In other words, fair value is equal to earnings multiplied earnings growth. Okay, this is Mr. Lynch book. Of course, I have it. This is one of the first book I read in my life. It was published in 1989, guys. So it's very old, as you can see from the yellow on the pages. Okay, but it still works because money works always in the same way. Okay, anyway, look what's behind the forecaster. Let's go here and look. This is the yesterday price of Palantir, 132, okay? And this is the forecaster terminal fair value. Andrew is writing, not as old as me. Come on, Andrew, don't be sad. So look, forecaster fair value 22. Look the formula. How can we get to 22? Very simple. Look the formula. We take E11, which is the last net income available for the company, 462 million, and we multiply this number for 123. What's 123? 123 is the earnings growth here. How the forecaster calculates it? Very simple. I already made an in-depth video on our YouTube channel. I can share it with you because it's very important you to understand that what you see on the forecaster, it's something real and not something someone you don't know invented that he doesn't want to share with you. You can open this button and here you can find it, how to calculate the intrinsic value of a stocks. As you can find in that video I just shared with you, what we do at Forecaster is calculating a very simple regression line on the net income in this case, okay, that tell us which is the growth rate for this number, okay, for these figures. And that's it. This is what Forecaster is doing. Forecaster very easily calculate the growth rate and multiply the last earning available for the company, and we have the result. Very simple. Here we are. And of course, we divide the results for the number of shares outstanding. Why I sold Palantir stocks? Because if today price is 132 and the fair value is 22, this is the formula, as you can see, number of share multiplied the Palantir price divided by the net income. Here we have a number, and this is the number that justify today, this is the growth rate, sorry, that justify today a $132 per share, okay? So the real growth rate is, as you can see here, 123. This price, this share price for Palantir is justified only with a growth rate of 736. You know what I mean, guys? It means, let's do another calculation. It means that if we multiply the last earning we have for the company by this number, okay, by 736, the company Palantir has to make $340 billion in net income just to justify the price of today. Okay, $340 billion in net income. Today, they are making 462 million. The actual price, 132 per share, are justified by a net income of $340 billion, B with the B, like ball, billion, okay? If we go, for example, let's go and we open the most important stocks of the world, which is Nvidia, and we go to fundamentals, guys, Nvidia make 72 billion in net income today. Palantir, for justifying the today price, should make 340 billion in net income. You know what I mean? It's not possible in my opinion. Could be because nobody knows, nobody can predict the future, but based on what I see in the last 10 years on the stock market, this is something very difficult in my opinion. Let's go to Apple, another very big company. They sold iPhones to all across the globe. Everybody they invented the smartphone, which is the most revolutionary object the history has seen in our lives, okay? And look, they today make $93 billion in profit, in net income. Again, just to let you know, the forecaster, okay, is telling us at the moment, if we apply a 120 growth rate to Palantir, we have a $22 fair value. To justify actual prices, the growth rate should be 736 times the earnings, okay? If we go here and we go back to the wisdom of Peter Lynch, he says the PE ratio of any company that is fairly priced will equal to its growth rate. You make an example on the book. If Coca-Cola has a PE of 15, you'd expect the company to grow at about 15% per year, and so on. But if the PE ratio is lower than the growth rate, you may have found a bargain. For example, a company growing at 12% annually with a PE of 6 is a very attractive prospect. On the other hand, a company with a 6% annual growth rate and a PE of 12 is an unattractive investment and likely to decline. In general, a PE ratio that is half the growth rate is very positive, while a PE that is double the growth rate is very negative. Let's go on the forecaster, let's go on Palantir. As I show you on the data, at the moment, the forecaster terminal calculate a growth rate of 123, which is massive, guys, which is massive. We are not talking about a 20, 30, 50%. We are calculating a fair value with the 123% of growing rate, which is massive. And even with this number, the company is highly overrated, is highly overvalued. Look at the PE. At the moment, the PE is 550. We know the correct growth rate is 120. And so at the moment, this company is 5 times more, more than 6 times more valued than the real value, which is calculated thanks to a growth rate of 120. This company doesn't make sense anymore at these prices. The company is still great. I love the company. The business is very good. They are growing, but these numbers doesn't make sense at all. Okay? If we go to the overbought and oversold, we can find an interesting situation because we can see that the chart started to be very red and orange on the peaks. But look what's happened to the market mood meter. It's after it went here in the oversold part, in the FOMO part. Now, in the last weeks, it started to decline while the company is doing the all-time high. This is a sign that both fundamentally and statistically, these numbers, these prices doesn't make sense anymore. Okay? You know something else? If we go to the fundamental part and we go to the transcript, here you can find, thanks to the artificial intelligence, that the company just decided to start a buyback program, because since today they just issued new shares every quarter. The company just said, okay, we can now start to buy back. But, and this is a sign that prices are too high, they didn't start yet. They are waiting. I really believe they are waiting a drop in prices to start to buy their own shares. Rajbudin, where can I find grow rate for each stock? At the moment, you cannot find it, but we are planning to plot it because a lot of you are interested. And when I show these numbers, you truly understand what's behind the forecaster. And the goal of the forecaster is to be something you can trust. And so we will plot it. Okay? You have just to be a little bit patient because we are developing a lot of things and it will come. Okay? So probably, I don't know when, because the company is in hype, but in my opinion, we can expect a drop in prices in Palantir. I'm not telling you to short the company because it could be very dangerous. It's still a very strong company. Look at the Alt 1Z score. It's skyrocketing. It's a very nice company. It's just overpriced at the moment, in my opinion. Look, 22 compared to $132. Too much. That's it. And I just told you why. If we go, for example, again, in my watch list, and we go to the company oddity, which is the last one, we put it inside the portfolio. As you can see, it's undervalued by 85%. Okay. If we go here and we see the calculation exactly made with the same method you now know very deep, look, the calculation is telling us $141 per share. And at the moment, the company is at 76 on the stock market. As you can see very easily, we are talking about exactly the opposite situation. And this is why in my watch list, oddities is at the top compared to Palantir, which stay at the bottom. Okay, they are exactly in the opposite side, because oddity, for example, I recently made a video regarding oddity. You can watch it on our YouTube channel. Is the last one I published 4 days ago. Is exactly what Peter Lynch is telling about a bargain. Something which is growing really fast, but the market is not so optimistic and is undervaluating the company. Earl, it's never a good time for a company to buy back its own shares when it's overvalued. Bad use of capital. Exactly. And this is why Palantir, they decided, yes, starting from now, we can buy back stocks. We can buy back our own shares, but they are not doing it. Do you believe that Palantir will one day make $340 billion in net income? If yes, the price you pay today is fair. But if you think, like me, that this is something really, really difficult, at least if not impossible, you have to stay away from this company at least until the company will experience a drop that, in my opinion, will sure come very, very soon. Anil is writing something interesting. Not in 2029. Exactly. Not in 5 years. It's really, really difficult. Maybe in 20. I don't know. Really, I don't know. But at the moment, this is very difficult. This is very difficult. And this is why, as you can see here in my account, I just sold the company and I will wait for a drop in Palantir price for evaluating another buying trade. Okay, guys, I hope this webinar today you enjoyed it. I really believe in the idea to share everything with you because I don't want to keep any secrets. The aim of the forecaster is not to have secrets with you, is not to be a black box. The aim of the forecaster is to be a tool you can trust and you can use, and you can save time in analyzing and doing your investments. If you have 1 minute, please go to Google, write Forecaster.biz, and please go here to Google review and write us a review. It's really important for us for going abroad. It's really important for us. And if you have 2 minutes and not 1, I really ask you to write a review also on Trustpilot regarding the forecaster. In this case, I can also share with you the link. If you're watching the recording version of this video, of this webinar, you can find the link in the description. And that's it, guys. I really hope you will give us 1 minute of your life in order to write a review, maybe mentioning the new watch list feature. I don't know what you can do what you want.